it's an actual money-making opportunity for investors. It's an investment which is even better than Nifty 50 investing. A lot of my personal investment will go into what we are going to talk about.
Yeah. Okay, there is a new NFO getting launched. Why don't you invest your money into it?
These are mostly being sold to people who do not understand the market.
Even these fund houses, or for that matter, whoever these so-called investment advisors, missell it.
NAV is just 10 rupees and it can easily go to 20 or 30.
Higher returns than Nifty with less beta and less standard deviation than Nifty. And the name of the indexes,
From its inception, which is 2012, has given over 22% CAGR.
it's a high risk, high return sort of an index. Investing into a rule-based strategic index and making higher returns than mutual funds which are being actively managed by fund managers and expert teams sitting somewhere. I mean, that is crazy.
Please tag Nithin Kamath in Twitter. Today's episode of the Aftermarket Podcast is one of our best for investors, both new as well as existing investors. So the first topic is going to help all new investors who are coming into the market by discussing everything that you need to know about NFOs, that is new fund offerings. So whenever a new mutual fund comes into the market, it's called as an NFO, and there are a lot of myths as well as missellings happening in this industry. So once you learn it really well, you can help yourself as well as your friends and family to take more informed decisions while coming into the stock market. And the second one is going to be super important for all existing investors, because we'll be talking about a new asset class or a new index which you can invest into, which can generate you more returns than Nifty while keeping the drawdowns as well as a volatility lower than Nifty. If you're interested, we'll be talking about that in our second story, all that you need to know about strategy indices from NSE. I'm sure that by the end of this episode, our goal, which is to spark the intellectual curiosity in you to get started into investing into the Indian stock markets, that will surely happen. And as always, we'll be posting bite-sized clips of this video in the Market Feed Clips channel. I'll be linking it here. You can go check it out. So if that's it, let's get started. Hey guys, so the market actually last week showing signs of stability, but then this week things again are completely different. It speaks a lot about the volatility. So last week Nifty closed about 24,000. Now it's back down below 23,500. I know, just a small fall, but very impactful, especially with the Monday's movement.
Yeah, the HMPV scare was real. We heard news from China over the weekend, and on Monday our markets kind of reacted, but now it's nowhere. Like, people are comfortable and kind of gotten over it. But then Monday's scare was real, and then the fall really continued throughout the week. And given the fact that Nifty is below its 200 days moving average, and on the daily structure also, it is kind of looking very interesting. Probable breakdown from here is being discussed in a lot of places, but yeah, that is definitely what is happening in the markets. But anyways, that's where we anyways give an update on what's happening with Market Feed's automated trading strategies. And then again, here we are on another podcast having to report bad numbers, unfortunately. So last week again, our strategies are down by more than 2.5%. But this is where this time it's different because we, with all our transparency, come here and talk about how our strategies are performing. And this time when it is down, we are taking a pause from trading. We are definitely not entering new trades for the upcoming new weekly expiry. And that is mostly because we speak about this a lot, right? All these are very, very back-tested, data-driven. We are so much obsessed about data. We look into how the markets are performing, how our strategies have performed in the past, over the kind of patterns that we expect out of Nifty. And this time around, with whatever we have been observing over the last many weeks, we have conclusive data saying that Nifty is definitely behaving in unclear patterns, in patterns which are not expected out of it. And we have conclusive data again. These are not, again, anecdotal observations that we do out of it. We have clear data saying that, hey, we should pause, we should take necessary actions and then resume. And that is what we are doing. As Ajay said in the last podcast as well, right, taking this on the chin and definitely taking all the right actions that we know of and then going up ahead.
I think users and even the audience would like to know, why did we pause now? Right, after multiple weeks of trading, why did we choose to pause now might be a good question to answer.
Absolutely. So there are a lot of things that that you do while you're trading, right? So you make changes, you optimize, you pause when needed. So what is important there is when needed, and when do you decide when is it needed? And that's where I always go back to, this is all data backed. I mean, yes, we have our observations, but then you cannot just go with your observations or someone else's hunch or gut feeling. That's not something that we do at Market Feed, right? I mean, when you are doing systematic trading, it has to be systematic and it has to be data driven. And we have multiple data with conclusive evidence saying that, hey, now there are certain triggers coming in and saying that, hey, maybe now we should pause and we should have certain solutions, and that's when you should resume. And that is when we will resume, right? Yeah.
And absolutely, I think we also have a framework and structure
Absolutely.
to when to follow what. So we are just doing that, and now it is showing us to stop. So we just pause it, and it is being communicated to all our users as well. So
Yeah.
Absolutely.
So I think that's where we should move into the first interesting story of the week inside the Aftermarket podcast. Before that, I would like to introduce all of us here. My name is Ajay. This is Nihal.
hi.
And this is Sharik Shamsin, CEO and co-founder of Market Feed.
Hi.
So yes, Nihal, what's the first story?
I'm sure you all are aware of a lot of money being pumped into mutual fund through lump sums as well as SIP.
I mean, the interesting, mind-boggling numbers there is more than 25,000 crores of rupees is going into SIPs a month from Indian investors.
Yeah, and
I mean,
even-
think about it, 25,000 crore rupees.
Absolutely.
And even in December, it hit an all-time high number.
Yeah.
So usually when the markets are choppy, investors are, theoretically, they get more afraid. And as Warren Buffett has said, be fearful when others are greedy and be greedy when others are fearful.
Yeah.
Right now, everyone is trying to be greedy when the market is fearful.
One interesting fact or data that is coming out is a lot of money that is going into mutual funds. The majority of the chunk is actually going into the NFOs, which is new fund offers. And that shook me.
Yeah, and when we are talking about this topic, I want to really establish why us talking about NFOs and making it as a big thing. Because very recently, because of this entire huge 14,000 crores flowing in, there have been a lot of new advertisements running, a lot of new funds being sold. So what's happening there? These are mostly being sold to people who do not understand the market.
Yep.
And a lot of people came and asked us, hey, what are these NFOs? Is it a good investment? The NAV cost starts only at 10 rupees, so won't it easily double?
Yeah.
And these are the kind of doubts which are coming in. And that's so sad to see, right? Because just because they do not have the knowledge about it, they are getting missold on a very good, potentially good product.
Yeah, even today morning, I just got a call from one of the AMC houses and saying, okay, there is a new NFO getting launched. Why don't you invest your money into it?
Yeah, when you're actually looking into the data, it says that more than 40,000 crores flowed into equity mutual funds in the month of December. And out of that 40,000 crores, more than 13,000 crores, almost 13,800 crores to be precise, came from new fund offers. I mean, that actually, again, can't wrap my head around it, but then that's the fact.
Exactly, right. I mean, if you think about it, 40,000 crores of rupees going into mutual funds, out of which 26,000 crores are SIPs.
Yeah.
And what is left is 15,000 crores, and out of which you're telling 14,000 crores is NFOs alone. So that definitely is a very interesting number because NFOs, we do keep hearing about NFOs, new fund offers, but then, hey, who is tracking the numbers and who is knowing that so much money is actually coming in via NFOs? And I think that's where maybe we should talk what NFOs are, right?
Yeah.
I mean, we've been throwing around this abbreviation a lot. I'm sure there are viewers who do not understand what new fund offers are. So let me break it down for them. So let's think about this, right? I mean, I am an avid investor in mutual funds, and I'm sure you're also. We invest into mutual funds, we pledge it, and we trade options with it. So that's what we do. So when we invest into mutual funds, we are investing into these funds managed by asset management companies or AMCs. And we have been investing into multiple mutual funds. And think about it. Someday back in the past, in the past, these mutual funds started one day.
Yeah.
These asset management companies floated these mutual funds saying that, hey, we are starting this new mutual fund, and now you can come and put money into this. And that day where this asset management company offered this mutual fund for the very first time to investors is what is called an NFO or a new fund offer.
So
theoretical explanation. I mean, literal new fund offer.
So whatever we see on the mutual fund websites, the inception date is what is the new fund offered date.
Absolutely, that is all it is. So it is the day where a mutual fund came into existence, and it doesn't just come into existence like that. And AMC created it and offered it to the public, saying that, hey, we are starting this mutual fund. You can come and invest into it. And from that day, it just start. Operating, and that's what you go to your Grow and other platforms, and you go to mutual funds, you see the mutual fund and see its historic returns. Someday it started, right?
Yeah.
And that day is what the new fund of.
But like when Sharik said, this is a new fund that is getting offered, and people can subscribe to it and buy or invest. So this is where people actually mistake it as like an IPO. This is not very related to IPO.
Much different.
Yeah, and even these fund houses, or for that matter, whoever these so-called investment advisors, missell it.
Yeah.
So I think that we have to address
Absolutely.
it.
I mean, I think that is the crux of the matter here, and that is what I like to talk about. Given that, 14,000 crore rupees is no joke. In a month, 14,000 crore rupees going into NFOs alone. I'm definitely thinking, why would... Because I don't think I have invested into any NFOs for that matter so far.
And
I only look into good mutual funds and put my money there. So why are people putting so much money into NFOs while there are good mutual funds already? What's happening there? So it looks like anomalous, and that's where I want to double down on your point of mis-selling.
Yeah.
Because we keep hearing this, where NFOs are mis-sold a lot to people who do not know a lot about investments, and that's why I think we should talk a bit more about that. And I think that should be the takeaway of this story as well.
Yeah.
People, if they have not invested into NFOs, they should understand what NFOs are. Two, if they see their peers or friends or family getting missold on NFOs by whoever they are missold by, then I think our viewers should go out and spread this awareness on what NFOs are. Are they good? Are they bad? Why should someone not even get into it, and all of those? But something which I cannot completely understand is comparing. Like, I see a lot of retail investors comparing IPOs, like you said, IPOs to NFOs. Completely different stuff. That's not an apple to apple comparison, because in an IPO, a new company, it's getting listed and it is offering its shares to the public to invest in. And on the day of listing, they might be saying a price band in which they might get listed, but based on supply, demand and other dynamics, there could be a listing gain. It's an actual money-making opportunity for investors.
And even for the companies, right? They're raising capital through the IPO, which can then be used to grow the company.
Absolutely.
But here, the mutual fund is coming and collecting money so that it can be invested into already listed companies.
Absolutely.
Right? So it's just any other mutual fund.
Correct.
There is nothing special about it, but there are certain advantages, right? So let's go there.
Before you go into advantages, let me try to play the devil's advocate here. Okay, I want to talk on behalf of our viewers. How would they think, and what would they try to defend? Why is it similar to IPO? Then again, we can have a conversation and we can clarify their routes. See, mutual fund is getting listed through an NFO, and a share or a stock is getting listed into stock market using an IPO.
Yep.
Here also, I'm investing at a particular price band, and even in NFO also, we have a 10 rupee NAV value which is fixed. Here also, I'm getting shares, and in NFO, I'm getting units. So why is it so different that I have to think in such a different angle? Why should I not think this as an IPO?
In IPO, you are buying into a company.
Yeah.
And then there are dynamics of price discovery where you can get a listing gain. While in NFO, you are putting your money into a fund, and that fund is getting invested into companies anyways, and there is no concept of listing gain. I hope that's clear. Do you want to dump it down a bit more to make it more clear?
Also, I was just thinking about this. So if you're investing into an IPO, there is a track record for that company.
Yep.
I know we're getting a bit into advantages and disadvantages here, but that company has existed for multiple years.
Correct.
After that, it is coming up with a huge fundraising thing into the Indian stock market with their IPO, initial public offering.
Correct.
But this mutual fund which is coming out with their NFO, while they have the badge of the AMC or asset management company which is bringing that out, they have no track record. It's zero, right? It's probably a new fund manager, or they don't have any returns to show. So they're coming in blank. It's a blank slate where people have to bet their money, risk their money to get started.
Correct.
So I think we went into few disadvantages or why you should not invest into an NFO here. So let's put it properly, right? There are more disadvantages. So Nihal, let's discuss that.
Absolutely. So the very first disadvantage is they don't have any track record, like Ajay said. Then it is purely on the AMC's reputation as
Exactly.
well.
Just adding there that this fund does not have a track record, but the AMC or even the fund manager taking care of that fund could have track record. But this fund, with whatever nature it is going to come out with, whatever it is going to track, that is what does not have track record.
Absolutely. And it has to be proved, and then only people should believe it if
Correct.
it is worthy investing. And obviously the second disadvantage coming down to is people who are investing thinking it like an IPO shouldn't, because there won't be any listing gains as such.
Yeah.
And the third biggest disadvantage people should understand is these NFOs will come with a higher expense ratio, and they might even have a exit loads. So that also everybody has to be very sure about and have to read through the document carefully. Okay,
Yeah.
what is an exit load? So even though when we are investing in these NFOs, newly listed funds, after it getting listed, which is the inception date, which Sharik rightly mentioned, they can have a certain rule saying that, okay, if you withdraw within a certain period, it could be 90 days, it could be 1 month, it could be 700 days for that matter, for one of the mutual
Yeah,
funds that we
Parag
spoke.
Mutual Fund FlexiCap actually has 1% exit load up to 730 days.
Yeah. So there could be such clauses within the objective of the scheme or the document that they have to submit it to AMFI as well as the SEBI. So we have to even understand that. So that could be also another downside. And then when do IPOs come into the market? When there is a bull run, when there is a lot of gains happening in the market. Similarly, NFOs also come into the market when there is a bull run and rally. So most of the times when these NFOs are coming, like even how you explained, these companies take money and put it into already existed listed companies. So their values also could be elevated a little bit or bloated. So you're technically paying a high price through these NFOs to get invested into the listed companies.
Yeah, because you're technically investing lump sum into the NFO, right? There's no SIP concept where it's fine even if the market is at a higher position, you can keep on investing. That's what we say, because it's an SIP, right? You'll get the averaging benefits.
Yeah.
But in an NFO, you're probably putting in or pumping in multiple lakhs of rupees, or I'm not giving an amount, a lump sum into the fund, and that doesn't seem like a great idea if the market is at a high.
And obviously, and the biggest drawdown for me personally is the newbies who are the new investors without understanding what they are getting into, just because they are missold. NFO being great or whatever, they are getting into the market. I feel that is again a very big disadvantage. So to summarize all of this, one, obviously higher NAV values that you might get. Second, mis-selling. Third, higher expense ratios. Then there could be an exit load as well. Third, these doesn't give you like an IPO listing gains. So you have to be aware of that. And obviously there is no track record of the fund. You might get a track record of the AMC as well as the fund manager, but there is no track record for this. So you have to be aware of all of these.
But when you talk a lot about the disadvantages of NFOs, I really think about certain advantages of NFOs as well, right? One is there can be a great strategy or a theme which no mutual fund is tracking today. For example, I can think about maybe green energy. So I'm not saying green energy mutual funds are not there or there, but if green energy is a theme that I like, and then some mutual fund is now starting a new green energy fund and an NFO is coming, maybe I will be interested. I'll be actually putting money into that NFO.
Yeah, because it's something different, a good time for you to invest if you have done your research and you didn't have the opportunity earlier. Now you're getting the opportunity. Earlier you had to pick your own stocks, go into each one of them and then buy them in the open market. But then here you can invest through a mutual fund route. So opportunity is the first.
And second advantage which I like is if there is a strategy that I like, but my favorite AMC is not offering that, then when my favorite AMC comes up with that, hey, that NFO is something that I'll be interested in. For example, for easy example, FlexiCap is a theme that we all like, right? And say Quant is an AMC I like a lot, and Quant did not have FlexiCap funds earlier, and now if it is coming up with a FlexiCap and an NFO is available, and if it is coming at the right time, I'll definitely be interested, and that is a good NFO, I think. And third advantage I can think about is slightly contradictory to what you said before. While you say that many times NFOs are missold to people, I am focusing more on sold to people. Let's forget the miss part. There are people selling it in the right way as well. Let's not look at the entire ecosystem saying that everyone's mis-selling. There are people selling it in the right way as well. So when NFOs are being sold to more and more people who never had exposure to stock market and never had exposure to mutual fund investing, which I believe is a safe way of investing into stock market. Hey, I look at the good side. All these people are getting or coming into the world of investing, which is something which I like a lot. So that's also a great advantage.
But there are some myths that you should be aware of. The first one being NAV is just 10 rupees, because for all new NFOs, NAV will be 10 rupees and it can easily go to 20 or 30. Another mutual fund with an NAV of 100, it will take more time to reach 200.
Yeah.
So that doesn't make sense for me.
Yeah. And even one more thing I keep hearing is, because the NAV value is 10, they get to hold more units for the amount they invest. If they would have invested in some other mutual fund with a higher NAV value, they wouldn't get so many units. So people are happy. Okay, I have 1,000 units in my portfolio. That is something, like a dopamine for them, which I think investors should understand. Whatever the amount you are investing in it, it is only going to give returns on top of that.
Classic beginner mistake, right? And that's the exact same mindset with which people look at penny stock also.
Yeah.
Because the stock's price is one, higher chances that it could go to 2 rupees or 3 rupees, which is double or triple.
The same
Doesn't
story
work
is
like
playing out in new fund offers
Yes.
or NFOs
Yes.
in the market.
Oh, so maybe we did a comparison of NFOs to IPOs, maybe a comparison of NFOs to penny stock. It's also maybe worth doing. But yeah, let's
Viewers,
not get into that.
But if you understood the advantages and disadvantages very clearly from this episode, I would like you to share it with all of your friends, right? Because you, as the stock market participants that you are, you might not be the target of these NFOs. Your friends who are not there in the market today,
Not informed so much.
they might be the ones who are getting these calls and they'll get sold very easily. So you have to convince the others or your friends and family that NFOs might not be a good idea and that there are multiple other amazing mutual funds with great track record that you can invest into.
I'll just add on saying that because I spoke about the advantages, I strongly feel that there are times where NFOs can be interesting and good as well. And those are times where people should consider them. But otherwise, to your friends, family who are kind of getting calls daily or at times to invest into NFOs, tell them the reality of what NFOs are. Share this video with them. Let them also be aware and become intelligent investors. But yeah.
And wrapping up about NFOs, I think the next story will also be very interesting.
Absolutely.
And the newbie investors who are looking to start their investment journey, I think this is a great time or a great opportunity for you. So it's the new year and a lot of people are searching for new investments. And we have this one amazing asset that we'd like to talk about today, which is a Nifty 50 Value 20. I think a lot of people might be hearing this for the first time, but it's a great thing to discuss. We promised this in the last podcast. Let's
Exactly.
get
Nihal
into it.
said we'll come up with an investment which is even better than Nifty 50 investing.
Yeah.
So let's talk about it. And as you know, I'm super excited about this story. I'm personally very bullish on this. And I think even a lot of my personal investment will go into what we are going to talk about now.
I mean, like Nifty 50 has been the OG go-to investment strategy for so many people and investors. And we've been hearing about Nifty 50 investment. It is the benchmark to hit. And even when mutual funds try to bring out a large cap mutual fund, their only aim is to beat Nifty 50.
Now, what if I say there is an index available created by NSE, which is investing into top 20 companies among Nifty 50, which means that they are investing again into blue chip companies only and has given better returns than Nifty. And when I say better returns in the last 10 years, CAGR of 19.9%.
That's crazy, right?
Absolute. So higher returns than Nifty with less beta, which means that less standard deviation than Nifty, which means that lesser risk than Nifty and much higher returns. Nifty returns is 13.5% CAGR on 10 years and what the index I'm talking about has given 19.9% CAGR over last 10 years, again by investing into Nifty 50 stocks. So I'm super excited. That's why I'm talking about this multiple times. And the name of the index is Nifty 50 Value 20. And this is an index created by NSE only.
Yeah.
It's an index just like Nifty. I mean, think about it. I'm super
And
excited.
this is nothing but a strategic index is what I believe.
Yeah. These are called strategy indices.
Yeah.
Right? And this is just one among the strategy indices. There are multiple among them. And when I speak about Nifty 50 Value 20 as an index, you can actually invest into it via mutual funds. We just spoke about it in the last story as well, right? There is a mutual fund available from Nippon, which is again a very famous AMC. Nippon has a mutual fund which tracks this index, which means you can put money into this index by investing into that mutual fund and you get higher returns than Nifty by investing into Nifty 50 stocks only with lesser risk. Man, this sounds like a magical opportunity.
It is a refined version of the Nifty 50 blue chip
Exactly.
OG benchmark. It is a refined version of it.
Yeah.
But again, maybe we can even talk about what is even a strategy index or how is it formed. Maybe we can just talk even about that.
Yeah, so strategy indices, as the name suggests, are based on certain factors or strategies. So let's take an example. So NSE has defined multiple factors. Let's take the example Sharik was saying now, which is value. You had the word value in
Correct.
it, right? Similarly, they have multiple other strategies, momentum, they have alpha, they have even low volatility. So all these are factors with which they mix and match all of these factors and come out with something which is called as a strategy index.
Yeah, I mean, if you think...
And in India today, there are 44 strategy indices. I'm sure a lot of people don't even know about this. So it's high time.
Exactly. So that's where, if you think about it, NSE is an exchange and it has a lot of indices.
Yeah.
So normally we as traders, we are very... investors definitely look into Nifty alone, and traders look into Nifty, Bank Nifty,
FinNifty,
Midcap Nifty.
Yeah.
So all of those are broad market indices.
Yeah.
So NSE has broad market indices. They have thematic indices.
Yeah.
They have sectoral indices. We all speak about them as well. Then there is strategy indices as well, which is very less talked about, and that's why I think a lot more people should talk about it, and we definitely are talking about it today, right?
Absolutely.
But again, giving more clarity or definition on what a strategy index is. If you think about it, Nifty 50 is also a strategy of sorts.
It itself is a strategy.
Exactly. Just like that, strategy indices also have certain rules, and each strategy index would have rules of its own, and it will rebalance looking into the rules, and that is what the index is. Now, we anyways talked about Nifty 50 value 20.
Yeah.
Let's understand rules of Nifty 50 value 20. I hope that will definitely help.
Yeah.
Right? So Nifty 50 value 20 is saying that Nifty 50 is my universe. That's rule number one. That is, every time when I am rebalancing, I will not look into entirety of NSE stocks. I'll only look into the top 50 stocks. And in the top 50 stocks itself, I'll rank them on the basis of certain value factors. Like you said, these are strategy indices are based on factor investing. So there are certain values they try to optimize for, like value, quality, momentum. So this is Nifty 50 value 20. So they'll try to optimize for value. So top 20 value companies among Nifty 50 as a universe.
Yeah.
Now, how are they deciding value? This is also given by NSE on their website, on their fact sheet. They are looking for companies with high ROCE, return on capital employed, low PE ratio, low PB ratio, and high dividend yield. I mean, we always talk about these as good ratios to value a company. Now, based on these rules, rebalance is done once in a year. That is annually. So, annually, NSE will look into Nifty 50 as a universe, and among these 50 stocks, which are the 20 stocks ranking high on these, and that is the basket of 20 stocks, and that is what Nifty 50 value 20 is. As simple as that. It's a rule, it's a strategy, it's an index, and then you can invest into it via mutual funds.
Yeah.
So it's rule-based investing of sorts, and amazing, right?
So that magic index has higher CAGR. It also has a lower beta value, which means that it is less volatile than Nifty. It has a beta of 0.8. Similarly, it also has a lower standard deviation, as Sharik had said, 17 versus 19 for Nifty, right? Just giving the numbers without decimals here, but hope you get the point. An amazing index, or let's say Nifty 50 on one side, which is already people are saying it's an amazing index.
Because it is diversified, top companies of the stock market in India, and if India is developing, then these companies will also do good. It will get rebalanced over time.
Exactly. So Nifty 50, amazing index, great returns, and on the other side, a better variation of Nifty 50, which is much better metrics than it, right?
Correct.
So I think every single person should be looking into what are strategy indices and trying to learn about, like we just talked about one, right? We just gave this as an example because we thought it will be the easiest for people to relate to who already understand Nifty 50. Now, when I said earlier, there are 44 strategy indices, right? So you can mix and match what you as a person want, and I'm sure you'll be able to find it in the NSE website.
But guys, again, we have been talking about the large cap investment alternative. But again, we also have to give our viewers a mid cap and small cap alternative. So that is where I would like to bring up this another interesting strategy index that we found, which is NIFTY Alpha 50. While Nifty has been giving 13-14% returns, we all know mid caps and small caps also were giving somewhere around 16 to 20% odd. But this Nifty Alpha 50 Strategy Index from its inception, which is 2012, has given over 22% CAGR.
I mean, it's a high risk, high return sort of an index. 22% CAGR over the last 10, 12 years is crazy. I mean, it's amazing. It has beaten your mid cap, small cap, as you rightly said. But that's where I like to bring our attention to one very interesting data which is available. That is in the last calendar year. If you see 2024, if you take all the mutual funds in India, Nifty Alpha 50 as an index, or the mutual funds tracking that index, perform better than 90% of all active funds. All active funds is all your managed large cap fund, flexi cap fund, multi cap fund, small cap fund.
Yeah.
Everything, if you put together as a list, Nifty Alpha 50, which is a passive index, it beat 90% of them. I mean, that's crazy, right?
Absolutely.
I mean, you're talking about investing into a rule-based strategic index and making higher returns than mutual funds which are being actively managed by fund managers and expert teams sitting somewhere. I mean, that is crazy.
True, very true. And like rightly you said, right? This is also again a rule-based strategy index. And what does the rules are? What are the rules mentioned is, see the name, right? Nifty Alpha 50. So what this rules say, or what do this strategy follows is, they'll see the top 300 free float market capitalization companies, and then they will see which stocks among these 300 stocks has the highest alpha. What is alpha? Whatever is outperforming the index by the highest number. So that they are going to see, and they are going to look at this 300 highest market cap companies, which are again very good blue chip companies anyway would come across. In that, what are the 50 stocks which have outperformed the index by a huge margin? And then they are going to invest in that stocks. Very simple, very plain, rule-based, systematic trading.
So those are the rules of Nifty Alpha 50 as an index. And I'll just add on to the fact that this is a fund which is quarterly rebalanced. So every 3 months, NSE looks into top 300 companies. That's the universe, and apply these rules, and whichever are the companies, then that is what is present in the index. And I love this fund so much. I'm actively thinking about putting a lot of money here, and because it's not just me, right? I mean, even you and a lot of viewers also have. When you are creating your portfolio, there is some allocation for large cap companies, and then or large cap mutual funds for that matter. Then there is some allocation for small cap and mid cap mutual funds as well, because you are ready to take some more risk for that higher return. And that is why I love this index so much, Nifty Alpha 50 so much, because in the last 5 years, when you talk about this crazy bull run in small cap and mid cap, where CAGR returns of small cap and mid cap has been 25 to 28% over the last 5 years. Nifty Alpha 50 at near 35% CAGR. I mean, the kind of alpha it is creating even over Nifty small cap and mid cap itself is unreal. So if someone's looking for having that part of your portfolio, which is where you're willing to take higher risk for higher returns, Nifty Alpha 50 is your guy.
And our viewers also has to understand that whatever these 300 stocks are would come under mid caps. So they're not even small caps technically. So that is amazing place.
But now when I just hear me back as what I just said, I mean, this should never be taken as an investment advice. This is definitely, I'm going back to what Ajay said before. Right? I'm not saying this is the best index, and again, going back to the fact that there are like 44 strategy indices available, so there could even be better ones. And I really want them to go out and learn more about them for sure. But these are two interesting strategy indices for sure. But
while strategy indices are looking good, there could be some downsides or some pitfalls that can come. What do you think they could be?
So the first thing is you can't directly invest into a strategy or any index, right? You can't go ahead and buy Nifty 50. You have to buy it through either an index fund or through an ETF. And the major problem here is there are very less number of mutual funds available for these strategy indices. That's a sad thing to see. And because there are very less funds and there is no awareness, there is also lower AUM and there is a lot of tracking error. So whenever you're investing into any index fund, you want to know what's the tracking error. How closely is this mutual fund tracking the index? And it is slightly higher here is something that we have noticed, but maybe that will smooth out over the long term.
Correct. When we say NSE is putting out a 10-year CAGR of 22% for NIFTY Alpha 50 as an index, a mutual fund tracking it or mutual fund which is tracking this index, letting you invest into this index might not or could not really give you that same 22% over 10 years because of what Ajay just said, which is
tracking
a
errors.
tracking error.
But,
And that's normal for...
And it's normal, and
it is
it's not-
higher.
It's higher,
Yeah.
but it's not huge. It's
Yeah.
not like 5 or 6%. It's maybe from what we observed, 1 to 1.5%, not more than that. So it is not significant enough for you to not consider strategy indices at all. It's still a great thing to look at, study about, and if interesting, and if you find the right mutual funds, then I would say it's a good
again,
look.
going back to NIFTY Alpha 50 is... I think there's just one mutual fund offering it right now, and that also just started 1 year ago, and that is from the AMC of Bandhan as well. So I get Ajay's point where the number of mutual funds are less. It's very the ecosystem itself is in a very nascent stage.
So, I mean, we can even summarize it and say how strategic indices are helpful for our investors.
I mean, let it be newbie investors or even experienced investors definitely should be considering strategy indices in their investment portfolio. I mean, think about it. NSE is backtesting an investment strategy for you, giving you the backtested metrics on NSE's website. You can go to NSE's website and download the fact sheet of all these strategy indices. You get the past 10, 15, 20 years of data, how this performed. And you can, with confidence, invest into mutual funds knowing what is the kind of returns this has delivered. So, depending on who you are as an investor and what your aspirations are, there are multiple strategy indices available. If you want high risk, high return, you have strategy indices for that. If you want low risk and low return, with bluest of the blue chip companies, you have strategy indices for that as well. So I think a really great instrument that anyone can consider as part of their investment portfolio.
Yeah, and since NSE is creating these indices, any mutual funds tracking them will be considered as passive mutual funds, and by design, their expense ratios will be lower.
Correct.
And I just hope like how new investors are showing interest in thematic funds and new NFOs are coming in this segment. I hope these strategy indices also become very popular with our podcast again. And we hope new NFOs actually come in this segment, and then we would like to invest as well.
Right, I'm definitely looking forward to it. A lot of very, very interesting strategy indices, even more than the ones we talked about in the podcast today. So, where mutual funds are not even available. So, NFOs will have to come here. Like we mentioned in story 1, right? I mean, where NFOs, one advantage of NFO is this only, right? Where I like a strategy index, but I cannot invest into that strategy index today because no AMC is maintaining a mutual fund on that. So I hope some AMC is coming up with a really good mutual fund on a strategy index I like.
Definitely.
But that is where I think another disadvantage we talked about, NFO is also getting taken care of. You mentioned, right? I mean, with an NFO, that fund does not have a track record. But if NFO is for a strategy index, then it has a track record.
So it has both the back test as well as a forward test.
Correct.
So some of these indices have been clearly giving a forward tested data since even 2012 or even earlier, right? So back test is there from around the year 2002, and then forward tests are there from the year 2012. So amazing place to be. So I would say fund houses, if anyone from any fund house is watching this, please make 2025 the year of strategy indices. We are talking about this with a lot of passion, with that hope in you. Make this the trend.
14,000 crores going into thematic and sectoral funds. Let's hear about similar thousands of crores going into strategy indices as well.
So there is this common quote: give a man a fish and you feed him for a day. Teach a man to fish and you feed him for a lifetime. And that's what I would like to do here. So how do you find these indices? How do you find these mutual funds? That's what I want to discuss. Very crucial for strategy indices. So go to niftyindices.com. It's an official website by NSE. You can go there, click on the indices button on the top, then click on strategy indices. Here you'll be able to see all the 44 amazing strategy indices which are available in the Indian market as of today. And from that, once you click on any strategy index, you'll be able to see which all AMCs are offering either an ETF or a mutual fund there. And I would ask you to go for the mutual fund route. So if you see that the mutual fund is available, then great. Try to learn more about the strategy index by going into the fact sheet. and getting to really know about the numbers, the reason why that strategy or that index exists. And I think that could be the start of an amazing 2025 for all of our viewers.
Yeah, and just doubling down on that fact sheet part. So you go into the strategy index page and download the fact sheet. The entire magic, the numbers, whatever we talked about here is available in the fact sheet. For example, Nifty Alpha 50, if you download the fact sheet, there you can see the rules, the universe, what rules based is, how it is created, what is the rebalancing timeline present there, and what are the current stocks in the index as of December 31. That's what you see if you try it today. And also it's CAGR return since inception, last 5 years, 3 years, all numbers, all metrics that you would love to know is available.
So one tough thing here, as I mentioned earlier, was it's hard to find mutual funds, right? And even if there are mutual funds, the AUM is low, which I don't think is a concern. But the fact is, it's hard to find mutual funds. But if I want to feed the fish to the person that is the audience, I would like to, I'll be uploading a template, an Excel sheet in the description for all of you to go check out.
The win.
So under which all strategy indices, which all mutual funds are available, and you can easily sort through them. You don't need to go open it one by one.
Then you can go to your favorite mutual fund platform, easily look into it, see the performance of the mutual fund as well, and that's where you can continue.
So because Nifty is so popular, they are forced to give out mutual funds for that. But again, I would love to request these mutual funds to be a bit more open, and maybe even new players to come in, like maybe Zerodha.
Exactly,
AMC.
I was going to mention that. Zerodha AMC's the entire thesis, the philosophy is to make passive investing cool, passive investing popular, and they would probably do this.
Please tag Nithin Kamath in Twitter and let him know about how MarketFeed has asked you to create strategy index mutual funds.
Absolutely.
So I think that's where I would like to wrap up this show.
Yes.
So 2 amazing topics. Really, really valuable session. I think one of our most value-packed sessions in the entire Aftermarket podcast history. And as always, you are the 4th participant of the show. So make sure you let us know any and all of your thoughts in the comments down below. We are reading each and every one of them. And Jibinjoy, we are hearing your comment about reducing the length also. So we understand, right?
And if anybody who is watching this and feel like their colleague or friend wants only about NFO or only want to understand about the sectoral indices or the strategy indices, then they can find the very small clip version of it on our Clips channel. And obviously, we'll be delivering a lot of value through our shorts as well. So viewers, please do subscribe to our Clips channel as well.
So yes, let's wrap up. This is Ajay Adit signing off. See you all. Bye-bye.
Bye-bye.